The data on the US labor market released on Friday dashed investors' hopes that the Fed may ease its tightening cycle. The jobs report turned out to be better than expected, although a bit lower compared to the previous reading. This week, traders will be looking ahead for inflation data that is already shaping the market sentiment. The US dollar managed to close last week with a gain of 0.55%. At some point, the US dollar index, which measures its value against the basket of 6 major currencies, fell to the level of 110. The US currency is getting stronger on expectations that the US Federal Reserve will resort to more aggressive measures in an attempt to combat inflation. The majority of the Fed members agree that capping consumer prices should be the highest priority, even if it threatens to slow economic growth. Meanwhile, all recent reports from the US demonstrate the resilience of the American economy. Against this backdrop, the euro continued to weaken and headed for a 20-year low. Investors doubt that the European Central Bank is able to fight inflation, although EU monetary authorities confirmed their intention to raise rates in an aggressive manner, just like the Fed. The economic state of the region is much worse than that in the United States. Naturally, in these conditions, traders prefer to invest in the US dollar rather than the euro. The state of the British pound is also quite discouraging. The pound sterling was losing ground as a new Prime Minister, Liz Truss, insisted on cutting taxes. In her recent statement, she reiterated that the Conservative Party will always be the party of low taxes. Investors took this comment as a confirmation that the tax system will be changed and continued to sell off the British pound. The new budget plan proposed by the current government threatens to destabilize the UK's public debt. In the meantime, the Japanese yen returned to the previous lows in the course of the weekly session. The dollar-yen pair has closely approached the critical level. Not so long ago, Japan's monetary authorities intervened in the market to stop the depreciation of the yen. However, this intervention has had almost no effect on the currency, as the Bank of Japan continues to follow its ultra-loose monetary policy and hesitates to raise the rate, unlike other central banks. Last week, gold was slowly regaining the trust of investors. Higher interest rates make US government bonds a more attractive asset to invest in. At some point, the gold surged above the level of $1,700 per ounce, supported by the data on the business activity. Yet the US jobs report brought back market expectations of a more aggressive auctions by the Fed, and still the precious metal managed to close this week with a gain of 2%. In the commodities market, traders had a profitable week. Brent crude returned to the level of $98 per barrel after the OPEC Plus members announced the decision to cut the output by 2 million barrels per day. This will be the biggest reduction in the crude output since the start of the pandemic. And US President Joe Biden disapproved of OPEC's decision and said that the US was looking for ways to cap oil prices. In addition, Russia confirmed once again that want to be delivering oil to countries that support the US proposal to impose an oil price cap. So it's very likely that the commodity will continue to rise in the coming week. And you have watched combined review on a currency and commodity markets on InstaForex TV channel. We wish you profitable trading with InstaForex and see you soon.